With modern companies providing increasingly large catalogues and technology facilitating easier stock management, a modern supply chain planner must spin many plates. As such, today on LokadTV, we're going to ask just how many SKUs a supply chain planner should manage, and just how many is too many. So Janice, it seems that supply chain planners have an awful lot on their plates these days. So how many SKUs does a supply chain planner tend to manage?
I mean, what I observed, it depends on verticals, but what I observed is that most companies, you would range from a few hundreds to a few thousands. I would say that's a ballpark. And although that in some situations, a few companies, go in the tens of thousands per planners, it is kind of exceptional. I would say literally most companies would go for numbers like 500 to 1,000. Those are very typical numbers as observed in many verticals. So I would say that's pretty much our baseline, I would say.
Okay, so how much is it dependent on a vertical? I'm imagining something like a luxury player, you're not managing many SKUs, but something like a hypermarket, you'll manage many more.
Yes, and I think here retail is probably the outlier where you suddenly have people, especially when you have like a retail network, you have demand planners that are going to deal with tons of SKUs. But actually, the thing is, I would say again, as classically practiced, the demand planners are only going to manage a few hundred SKUs if they are part of a retail networks, but that's going to be at the warehouse level. At the store level, what they are typically going to do is something along the lines of having some kind of min-max templates that they replicate against a large numbers of stores, potentially stores that are all having the same classes. So in a way, they are not directly managing the SKUs at the store level. They are just managing some kind of a meta SKU, a template or something. And so technically, if you multiply the number of stores being managed by the number of products, you end up with a very large number of SKUs. However, it's not the way the work is typically done, again, classically. And so we fall back to something where managers end up with a few thousand SKUs at most that they I would say, that they're managing per person.
Okay, so what is it that is driving the amount that somebody would manage? Is there some sort of classic rules that people are following here?
Yeah, I mean, the classic way that I would say most demand planners, supply planners operate is literally to go through a long spreadsheet one way or another and just iterate through all those elements. You present the layout with one SKU per line. You have a few, one or two dozen, sometimes more of I would say instrumented columns that gives you some various indicators, how much you've sold during the last couple of weeks, how much you've sold during the last year, how much you've sold in the category, sometimes how much you've sold in the same period but last year, so that you can have a look at seasonality, etc. So you instrument a few dozens of columns, and then you literally go line by line adjusting your quantities and your min-max, and then when you're done with the spreadsheet, well, you go back from the start and you iterate, and potentially you slice and dice your SKUs into classes like ABC, whatever, so that you spend more times on the top sellers and less times on the slow movers, and that's kind of it. And you see and the number of SKUs becomes very much defined by the time it takes for the demand planner to do a cycle through the list of references that this person is managing.
So in that example, I'm imagining that depends on a lot of product kind of variability. So if you're in a company like Coca-Cola, where there's just one product, does that mean we've only got one demand planner?
No, I mean, Coca-Cola has hundreds of products. And if you start looking at the sort of things that need to be planned from a Coca-Cola perspective, first, they will need to pretty much plan every single channel, because their channel are gigantic, retail networks. So typically the planners are going to be organized, I mean, it varies, but by geographies or channels. And so you end up back with a planner for one channel, they have a few hundred SKUs, and so you end up being back to this sort of a few hundred SKUs per planner. They also frequently, I mean, companies, very, very large FMCG companies would also have to do a bit of VMI, vendor managed inventory. So again, you would fall back to those a couple of hundreds, I would say, of SKUs per planner.
Okay, and then how about kind of forecasting difficulty? If you're in an industry where there's lots of new products, something like fashion, does that mean you'll be able to manage less SKUs per person?
So that's interesting thing. And again, I'm describing here what I would say what I consider to be mainstream nowadays, not the way Lokad operates. But the thing is, when you go for very high erraticity, it's typically products that are very low volume. You see that there is like inverse correlation between erraticity and volume. If you're a large FMCG, you have high volumes, low erraticity, but also, so you would think, oh, if I have less erraticity, maybe the forecast is easier. Yes, but also what you're forecasting is, from an economical perspective, is very, very important because we are talking of a large mass. On the other hand of the spectrum, if we are talking of a super, super erratic forecast, let's say, automotive spare parts, the long tail, then yes, it's incredibly erratic, but also the volume is just very, very low, and the value is not that great. So even if, yes, technically the forecast is more difficult, technically the erraticity is much higher, but the economic reality is that it's the economic weight of this article in your supply chain is low, and thus doesn't really matter whether it's more difficult or not. It is not very reasonable to spend more time on those articles.
Okay, and so then let's maybe contrast the way that Lokad does it compared to the more classic approach. So how does it vary compared to what a supply chain scientist would manage compared to what you could manage in a classical way?
So the classical perspective, and that's why we end up with this number of SKUs per demand planner. The classical way is literally people consolidate, their instrumentation. So literally a big spreadsheet, dozens of columns that explain what you should see, and then people just take decisions rotating through the spreadsheet. So you go through the spreadsheet, starting with your A, and then spending a bit of time, less time on B, and then less time on C's, etc. And rinse and repeat, and you revisit. And maybe you're going to revisit all your A's on a daily basis while you revisit all your C's only on a monthly basis. But fundamentally, the time spent by the planner is something that is it's operational expenditure. It's OPEX. If the work, you consume the time of your demand planner just to do the demand planning work, there is nothing that is capitalized. The only tidbits of capitalization is to have a well-designed spreadsheets where you have all the relevant columns. This part of the work, having a nice instrumented spreadsheet, it is capitalistic in the sense that you do it once, and then your work is faster for all the month that follows. So this part is capitalistic, but unfortunately this part is just a few weeks at the beginning, and then it's done. You don't capitalize beyond this point. The approach of Lokad is very, very different. A supply chain scientist is fundamentally going to craft a recipe where you want that all your decisions out of the box to be non-stupid. You want to have 0% insanity. That's the first milestone that we target when we want to go for production.
So what would be maybe an example there of what would be a stupid decision?
Stupid decision would be, I have a store. It is a fashion store. I have handbags, and actually I just put in the store only brown and black handbags because that's the color that sells the most. And thus the shopping window is kind of sad because in terms of color, it's just brown, gray, and dark, and black. And you would like to have touches of colors, maybe a bit of white, a touch of yellow. And the reason why you want to do that is just for merchandising purposes. So you see, a really smart, inventory replenishment decision, for example, needs to take into account things that are not just, purely sales-driven, service-driven, but also you want to take into account the fact that the store must look good. So you see, those elements requires a degree of thinking where if you start thinking about your inventory replenishment problem from a safety stock perspective, you will end up with tons of decisions that are very stupid. And so what I say is that you want to have numerical recipes that really capture those sort of insights, so that all the decisions that are taken reflect, the sort of expertise that somebody who is doing the job manually would actually do, not sticking to the naive safety stock formula, for example. So first, you want to establish, a numerical recipe that does that. And then once you have that, well, you realize that you can operate pretty much at any scale. And we have supply chain scientists at Lokad where one person individually, so we have one that manages over €1 billion worth of stock, just one person. And one person is managing something like 4 million SKUs individually. So you see, there is suddenly, you have a complete disconnect in how many SKUs and the amount of people. One person can scale to levels that would represent, if done classically, dozens, if not hundreds of planners the classical way. And by the way, we had massive conduct of change that did happen on our clients when we did roll out this sort of techniques, because suddenly it doesn't mean that all those planners were, by the way, were fired. There are tons of things where you can have more added value. But the question is, if you are part of a company and that what you're doing is just cycle through a spreadsheet every single day, how is it creating accretive value for the company? Does it really, is the company really making an investment in your work, where the work you have to produce is generate capital for the company, something that is an asset? Or is it just something that gets consumed? Just again, that's CapEx versus OpEx. And the Lokad approach fundamentally is really to think CapEx, CapEx, CapEx. We want to have an asset. So
how is that numerical recipe kind of building that asset then? How does that work?
The idea is that why should you actually revisit your spreadsheet every single day? If you take a decision, you take this decision based on the data that you have. So you see, as a demand planner, when you have hundreds of products, you don't know every single product by heart. You know every single thing that there is to know. I mean, it may happen in some very specific fields, but it's very rare. Usually, you just correctly engineer, your dozens or so of columns that explain what you should be looking at, and then you take a numerical decision based on that. Well, the approach of Lokad is say, well, let's implement what you're doing in your head. And yeah, it requires maybe some tidbits of very specific machine learning to do that. Yes, maybe. Maybe there are relationships that are not easy to express in terms of just plain numerical formulas, classic numerical formulas, because maybe you're doing in your head, you're doing a risk assessment. So the way Lokad, for example, numerically tackle risk assessment is through probabilistic forecasts with economic drivers, but you see there are a whole series of problems, and the idea is that whenever you end up a number generated by your numerical recipe that looks just wrong, you need to treat that as a bug and fix it. And so you see, and there should be no exception, no alert.
So you mentioned there kind of those tidbits of machine learning kind of techniques. Should all companies be looking to kind of leverage those sorts of technologies in their approaches?
I would say any company that is still employing nowadays white collars to do exceedingly repetitive tasks is just doing a mistake, period. You see, no exception. There are areas where, in terms of physical, there are some operations that are still very, very difficult to automate, because, for example, robots tends to be rigid. So sometimes having somebody just to do something, for example, just operations as simple as cleanups, where there is, let's say, you have a spillage of oil in your warehouse and you just need to clean it. It is actually exceedingly difficult to automate that, to have a robot that can do a bit of cleaning, take a sponge, and do that. That is very, very, very difficult. So there are some sort of jobs that look simple, like just take a bucket of water, a sponge, detergent, and clean it. These are the things that are exceedingly difficult to automate, and they are kind of beyond the capabilities of our most sophisticated robots at present time. Okay, so in this case, well, we have people to do this work, but automation is just beyond our technical capabilities. But when it comes to essentially supply chain decisions, such as, and I'm talking of numerical decisions, such as what should I order, how many units I should order for every single SKU that I'm managing, should I move my price point up or down, should I do inventory transfers from location A to location B, all those questions can be entirely automated. I'm not saying it's an automation like without human supervision. That's not what I'm describing. I'm describing, a numerical recipe. It's not like Skynet is taking over. This is a numerical recipe that has been engineered by a human, where people understand what is going on. It's just that you deploy the very human insights at scale, letting the computer do the mundane numerical work for you.
Okay, so where do the limitations lie then? You mentioned that supply chain scientists will be managing billions of dollars worth of stock. So what's kind of the limiting factor then?
The limiting factor becomes the complexity of the supply chain itself, where at some point, your numerical recipe is going to be an approximation of your supply chain. It's better to be approximately correct than exactly wrong. And so the supply chain scientist cannot, model exactly the reality. It's always, you always have to make choices, and this is so that your numerical recipe remains manageable from just a software perspective. You have lines of codes. If you are one person, you have to maintain 20,000 lines of code. This is manageable. If you're one person and you need to maintain 500,000 lines of code, then it becomes unmanageable. So there is a balance literally in the number of lines of code that are involved. And thus, if you have one person, at some point it becomes, I would say, interesting to just introduce, especially if you go for very, very large supply chain, to kind of try to find ways to split your supply chains between various supply chain scientists, so that individually they can spend a bit more time on certain problems. So for example, if you have one supply chain and you have, let's say, pricing decisions and purchasing decisions, at some point, although those two things are going to be heavily entangled, but at some point it makes sense to have two persons just to have a higher degree of refinement in your numerical recipes for pricing and for purchasing. But nonetheless, those two persons are going to be discussing, I would say, a lot and coordinating their action, which means that also you have diminishing returns in terms of productivity. So you see, it's just that at some point, to get this extra 1% of performance, it is very reasonable to add more people to the case, even if that means that, in terms of productivity, adding the second person only improve, the productivity by a plus. If you were having like completely linear, you would say plus 100%, productivity. If you production, I would say production output. If you were adding a second supply chain scientist, in reality, you're only going to have like 50%. And then you add a third person, and this third person is only going to add like 30%. So it's going to be, very rapidly decreasing in terms of throughput. You have like very strong diseconomies of scale. Nonetheless, if you're operating with a very large supply chain, it is worth doing that, if only to mitigate, I would say, truck factors. When there is somebody that leaves, you have somebody that is ready to take over.
It's interesting you kind of mentioned the word kind of productivity there, because it all sounds like a bit of a paradox. You've got kind of this one person that's responsible for so many more kind of SKUs. I mean, how can they be more effective and more quick in their decisions than a team of people that are responsible for a smaller scope?
Because the team of people who are responsible for a small scope, there is nothing that is very capitalistic in what they do. The only capitalistic part is the setup of a clean, nice spreadsheet, your work environment, which happened, during the first couple of weeks, and then you don't capitalize anymore. So you're stuck. You're stuck in the dead end where suddenly all your efforts are completely consumed, and you don't inject more intelligence in the system. You just cycle through a process that consumes all your time, and so you don't have any time left for continuous improvements. And you see, the approach of Lokad is say that 100% of the effort of the supply chain scientist must be dedicated to continuous improvement. So the setup is taking a bit longer than those, again, from the classical demand planning perspective, you could probably have a setup in 2 weeks where you just instrument your spreadsheet and then you're done. A setup from the Lokad perspective is probably going to take, a few more weeks than that. But in exchange, you end up with something where you have something where you get 100% of your decision that needs to be taken on any given day done automatically, which gives you almost all your time to focus on the continuous improvement. And you see, the thing is that if you treat every single problem as a bug that needs to be fixed, that means that you put yourself in a position where when you walk into the office every single day, essentially you just spend a few minutes to make sure that there is nothing like you don't have a fire to extinguish, just because something completely unexpected, like a warehouse being flooded. Nothing of this sort did happen in the supply chain, and then you can spend your entire day improving your numerical recipe, and that gives you an incredibly capitalistic approach. And if you think that because then the supply chain scientist every single week is going to, add a layer of improvement that is exactly the sort of things that was happening for, I would say, from a classical perspective with the demand planner during the first 2 weeks, but then it stops. And with the Lokad perspective is that this super capitalistic work, it never stops. And that's why fast forward, a couple of months down the road, you end up with something where it's just one person, but it's much more productive than the classical approach, and it is also, in terms of supply chain performance, it's also much better, just because again you've built upon your improvements in a way that is highly, highly capitalistic.
Okay, we'll start sort of wrapping things up then. So where do the biggest kind of barriers lie to introducing these kind of capitalistic kind of approaches? What are the big challenges you kind of need to overcome?
I mean, the biggest challenge is that for decades, I mean, we didn't have the sort of, I would say, software recipes, software technologies to make these sort of things possible. So we had those spreadsheets, and then, for example, at Lokad, until we figured out, the probabilistic approach, we had really hard time to express numerically what was happening in the head of a demand planner who was doing some kind of risk assessment. It just you understood kind of intuitively what was happening. People could describe what they were doing, but then how do you translate that into formulas? That was open question. And there are approaches like safety stock that just try to do that, but it's just not working. So we needed a better classes of numerical recipes. So that was the sort of things that was blocking. Also, I think that was, I would say, one class of barriers. Another class of barriers was many companies were not thinking as supply chain as a function of any importance. So supply chain was just like a support function. So the fact that it's not accretive, I mean, it wasn't a problem. That's a support function. It costs money. That's just like most support functions. You don't expect your support function to create value for the company. So it's just a cost center. And as long as this cost center keeps its own cost under, control, then so be it. So be it. So you see, it was twofold. I mean, first, the fact that there was no real technological ways to make this thing capitalistic. And then the second thing was, if people don't realize that it's an asset, then they don't enter the sort of mindset it takes to really change the practice so that it becomes capitalistic. Because you see, for the supply chain practice to become capitalistic, it needs to start with an act of belief, an act of faith, if you want, that it can become an asset. As long as you think that it's a pure, that it's just a support function, that it's just a cost center, then guess what? It will never grow beyond being a cost center.
Yeah, it's an interesting concept, this idea of changing things to be more capitalistic. So we'll have to wrap it up there. But thanks very much for tuning in, and we'll see you again in the next episode. Thanks for watching.